How much should you allocate towards high risk investment opportunities and how much should you allocate towards low risk, safe return investment opportunities? And what is safe? Over the last several months, I've been in the UAE for 8 months now. And because of the place where I am, I've been networking with some incredibly high net worth individuals. Now, most of my audience are dentists, doctors, high net worth professionals, etc. And the issue with a lot of these people is that when you've got someone from a dentist who's making 10 to 15,000 pounds a month, all the way to a high net worth individual who's making maybe several hundreds of thousands of pounds per month, because they're making such a high income per month, they feel more comfortable risking a much larger sum of their money towards higher risk opportunities. And the main issue comes from not understanding risk properly. Now, on one hand, I understand the mindset of if you're making 15 to 20,000 pounds a month, you feel comfortable just throwing 5,000 pounds or 10,000 pounds at some random opportunity because you're confident that if this doesn't do well, you'll make that money back the next month and then you'll find something else to invest into. And the issue is what you're doing is you're just throwing darts at a board randomly with no technique, with no strategy, with no practice, and you're just hoping one of your darts is going to stick and hit the bullseye. And it's such a horrible strategy. It does not work. The issue is that what you are doing is that you are continually gambling. This is not investing. This is gambling. And you're continually losing money at random opportunities, hoping one random investment is going to stick and make you a millionaire overnight. That is not how it works. There's a concept called survivor bias. And I think it was in World War II, when the warplanes would return to base, they would look at the areas of the plane where the most bullets were. And they would say, okay, this area of the wing has the most bullets, so we need to reinforce that area of the wing. But that was a mistake. The areas that had the most bullets is where the plane was able to take damage and still return to base. Whereas the areas that had the least bullets when the plane returned to base means that that was the area when the plane was being shot, it was not survivable and the plane was being shot down. And that is the issue with survivorship bias, where you're seeing all of these news articles online of young 18, 19, 20-year-olds investing into a random crypto poo coin, right, and making millions overnight, is that you're only seeing the minuscule percentage of individuals who are actually making a lot of money overnight or in a short space of time. And what the news articles, these crappy online news articles, are not showing you is the thousands upon thousands of individuals who have tried to do the exact same thing and who have either just lost that money that they've invested, or even worse, lost all of their savings and become bankrupt. That is what you're not seeing. And that's why it's so important to approach investments with a proper strategy. So what we do with high risk investments. Now, high risk investments, what you need to understand is that generally you look at the market with the longest history. And currently, one of the markets with the longest history is the stock market. The stock market has a history of over 100 years. So we look at the history of the stock market. And if you look at the history of the stock market, if you look at the top 10 to 100 companies on the stock market, you're going to see an average rate of return of approximately 8 to 10% a year. Profit per year on average over the last 60 to 100 years. Naturally, that has to be your base. That has to be your base of a well-diversified investment. If you make between 8 to 10% a year consistently, that's a very good, fairly safe average rate of return per year. Now, if someone comes to you and says, hey, doctor, invest into my business. It's a new business. I've just started it up. It's a makeup company or some cosmetics company or some supplement brand. I want you to invest into this company and I'm going to give you 50% returns at the end of 12 months. You have to look at this and say, okay, this person is offering 5 times the average rate of return of a safe market. What does that mean? Most new investors approach this thinking, wow, 50%, that's 5 times what I can make from the average. First of all, they probably don't even know that the average safe rate of return is around 10%. And then they see 50% and think, well, I can make 50% profit after a year. That's amazing. And all they're seeing is they're laser focused on the profit. And they're forgetting about the risk that they can also lose all of their money. And the fact that all new startups, all new companies, angel investing comes with a huge amount of risk. Most new companies fail. And that is what you need to look at, not just the promised rate of return. So when someone comes to you and says, listen, I'm going to give you 50% returns after 12 months, you have to look at it and say, okay, they're offering 5 times the normal average comfortable rate of return compared to, say, the stock market of the top 100 to 500 companies. That means, yes, fair enough, the return looks good, but there's never any guarantee of return in the investment markets. Never. If anyone comes to you and tells you, I'm going to guarantee you a rate of return, that's a scam. Okay? Do not go anywhere near that. Secondly, if they're offering you something like 50% return after a year, that is also 5 times more risk at least, if not infinitesimally more than 5 times the risk, meaning that you can lose all of your money. And you have to understand that if you're going to continually invest into all of these high risk opportunities, you're probably going to lose your money again. And even though you're making a lot of money and you can just make the money back next year, you're not making the money back. You're actually in 2 times the hole that you were before compared to if you hadn't lost that money. So forget about the rate of return. Look at the opportunity. Understand that new businesses, startups, all of these crazy, stupid new investments that people are coming to you, telling you about, especially if they do not have credibility in the market, these are most likely either scams or they're probably incredibly high risk investments that you are most likely going to lose your money on. Okay? Do not focus on the promised rate of return. Focus on the risk and understand that if you had instead just invested into safe assets with the majority of your investable income, you would be in a much better financial position, a much better wealth position in 5 to 10 years compared if you're just trying to chase that one high risk, crazy rate of return investment that's going to make you a millionaire after 1 or 2 years. This does not happen in the investment markets. You have been brainwashed to think that it does happen because that is what these online tabloids want you to see. Because remember, nobody is excited to see the person who became a multimillionaire after 20 years by just investing into safe, halal, Sharia compliant indexes or safe property that returns maybe 10 or 15% a year. It doesn't excite people, but that is the way that the vast majority of wealthy individuals, of multimillionaires, have built their wealth. It's not from inheritance. It's not from high-risk opportunities. It's not from becoming millionaires overnight from a random crypto investment. It's from investing consistently over the long term, diligently, without putting themselves and exposing themselves to overly high-risk investment opportunities. So, listen, guys, at the end of the day, I've said this many, many times, you have 2 options. You can either take the time, dedicate the time. It's going to take a lot of energy. It's going to take a lot of hours to learn how to invest yourself. And I would highly encourage every single person to do just that. You need to learn how to invest. Okay? If you're going to take the time to learn how to invest yourself, it's going to take a lot of time. You're going to make a lot of mistakes. A lot of mistakes are going to cost you money. Probably on average, from my experience speaking to my clients before they've joined our agency, they've lost around 5 figures in capital trying to invest themselves before they make the decision that, you know what, I need a mentor. And then naturally, option 2 is to get a mentor, is to get an agency that can help you, that can direct you and prevent you from making those costly mistakes, that can save you a lot of time over the long term and the short term. And that is exactly what we offer. But I'm going to be very honest with you guys, we do not take on a lot of clients per month. We take on a very small number every month. We have a very strict application process because we will only want to work with people who align with our vision, who align with our principles. If you do not align with our principles, I'm going to be very honest. We're going to try our best to direct you to somewhere else that will be able to help you, but we will not be able to take you on. But if you apply to our agency and you qualify, then I can promise you it's not going to happen overnight. It's going to involve a little bit of diligent work consistently, but our system works. It's worked for over 100 professionals just like you. All you have to do is check the links below, apply, and inshallah, we will speak very, very soon. Assalamu alaikum.